Okay, now let's get into the juicy part. Let's talk about the real numbers so far, and let's talk about the financial forecast and the next financing round. So we've talked about revenue, we talked about growth, we talked about margin, we talked about cost, we talked about burn rate. Actually, we did a lot of this. You know what? Let's skip this because we're going to talk about it. So we're just gonna reorganize it in our post editing if we need to. Now let's talk about the future. And this is very juicy. I'm very excited. So we talk about client. Okay, do you have a target in mind and a timeline in terms of like how many more doors you want to get? What's your target revenue? We talk about cost, so I know you wanna increase your margin. And then we can talk about valuation, milestones, next round of financing, etc. Do you want to talk about your revenue target, like number of doors target for to start with?
Yeah, sure. So we've seen a huge bump, and we expect to like end the year in just over 2 million in revenue. And we're anticipating to get to somewhere in the vicinity of 4 to 5 million by Q1 next year. We're looking at doing a Series A then at a much bigger valuation than what we're doing today. And that's kind of the exciting part for like investors right now. It's just like you're really getting on early to like, if you believe that we've done what we've done so far, then we're gonna keep doing this, and then getting into that point to do a Series A at that point. So we're targeting a Series A in Q2 of next year, and that is that's at that point end of Q1 we're expecting to get 4 to 5 million in revenue.
Okay, so how can you double your revenue just in the first quarter of next year, which is like a few months away?
Oh, how did we double it since July? Oh no, how did we go 4x since May? I don't know. Um,
Oh
uh,
my goodness. Really? That's really some like a real like exciting
yes. So we have been consistently seeing over 20% growth a month to month.
monthly month.
25, 28, 23, 19 1 month. But like, this is kind of like we're seeing that growth, right? Like it's and I'm saying that the reason why we're confident in this is because this is not luck. This is not like, oh, we just pulled like one client and we got all this revenue. This is coming from like pretty evenly spread out across a lot of clients.
Okay, take your time, take your time.
And it's
It's
very
okay.
it's
We'll
very
add it.
marketing driven, you know what I'm saying? So it's so the if anything, I think it get better and better. So so you said risk. I think some of the risk is like it's really important to serve your first clients like incredibly well, like unbelievably well, right? So one of the risks that I worry about all the time is that not if we're doing a good job, are we doing like an amazing job? So we have uh like it's like customer delighting the customer. It's not about satisfying the customer, it's about are you delighting them, right? And so that plays a huge role in like as you kind of like grow your revenue too. So yeah, anyways, we're confident in that. So I was just mentioning this because some of the risks that I see, I think, is to make sure that you don't have churn and make sure you keep getting clients on. But as long as we keep delighting our customers, the revenue is going to keep coming.
Right. Now, do you have a dedicated customer like account managers or are you doing the job?
No, we just onboarded like 6 weeks ago someone who's dedicated to making sure that our clients are satisfied and happy.
Good, good, good. Okay, so amazing. Okay, so that's the target revenue you're looking at just in a few months. That's amazing. Okay, so you mentioned VC's looking at you guys. What's the situation over there? And I know you mentioned that you're funding a lot of it yourself. I'm guessing it's because you probably want to retain much more control, much more shares, because at this age, I think at this time, I think like the valuation is still relatively cheap to what you potentially could be. Is that the reason?
I mean, that's it. Like, we're essentially, I'm putting money in because I think my money is best put in this place than anywhere else right now. And that's because I trust what's coming in the future, and I trust like the numbers coming in. Um, and so yeah, so as I'm doing that, I'm realizing that yes, it's like similar to the snowball that we said
Yeah.
around like people. I think investors are the same thing. Not every investor is the right investor for you. You
Mhm.
have to find the best investors in this industry to be able to work with you,
Mm.
and the people that are right for you. So like it's really important, and I learned this in my first business, not rush and just bring any money in, but just really work with people that believe in the vision, and not like super optimizers. And so I think as we
Yeah.
progress more,
Mhm.
we are seeing more of that, and we're getting more options of like better VCs that are opening up, but also more importantly, like you said, we're essentially not giving the business at a discount, right? So if we're growing, like why would I like rush to give the business away today?
Right. So what do you think the valuation? Well, are there people, are there like well-known VCs already interested? Are you guys talking? And like,
Yes.
have they given you indication of the valuation? Like, what's the sort of,
Yes, like we're in discussions, like we've heard valuations of anywhere between 30 to 40 million.
Mhm.
So in the 30s, it seems like that's like the right spot for a lot of VCs. The last round, which we did not long ago, we did it at a 26 million valuation.
That's how I got, that's where I got it, right?
Yes.
Yeah, okay. Then what's your timeline after that? So you're gonna raise Series A with a certain valuation, and then what happens after? What's the timeline? What do you think the exit option would be? How many multiples do you think this will be? Like your estimate.
Yeah. So let me actually step back. So like, and this is between us, but the allocation is um like the small allocation that we have now. Then we have these VCs that are interested in doing
Yeah.
the $3 million round. And really why we're taking that money is because we brought like a really good like VC on board who like knows a lot about these agents.
Yeah.
And he really convinced us to like take seed money from some of these VCs because they're gonna make the Series A lot easier essentially, right? So they said, and typically these guys want at least to put like a few million in. So we're gonna try to like get the least that we can, but raise 3 million from these guys soon, which is the discussion that we're having with these guys. And then really the purpose there is like for them to like institutionalize us and get us really ready for that Series A. And the
Mm.
Series A, if we do things right, hit 5 million, I think we can raise that like an 80 million valuation, maybe around that ballpark, right? If we do incredibly well, maybe we do it at 100 million. We'll see, like around that ballpark. So we raise there, and really from there on, like it's I think post Series A, you get to really know like like how amazingly big this business is going to be. Because at that point, you still have like a very good business. It's incredible. It's stable. It's way de-risked. You have a lot of money in the bank. Like you have 15-20 million in the bank, and then like you kind of map out like what that looks like in terms of Series B and onwards. But just to give you some like initial estimates, like next year today on our plan is to like end the like we're gonna end this year, call it at 2.5, whatever it is. Next year we want to be at like 12, 13, 14, 15 million, right? So this is the kind of like the like growth like rates that we're talking about.
What do you mean? You mean next year, like 2026? Sorry,
2020 December 2025. Like we want to end like basically
yeah,
end December 2025 at a run rate revenue of 12 million.
12 million AR.
Yes.
That's some serious growth.
Yeah. So look, we hit like close to 10 in my last business. Within 3 years, we hit 10 billion. So
Well,
call it 3.5 years. This one, I think, yeah, that's why I like this one's way stronger and better, and it's better revenue, honestly. So
so
we
you already hit 10 million with your previous venture in 3 years. Is that what you're saying? Now you're saying with this one.
no, we did in my last venture, we did like 3.5 like years.
Mhm.
We hit like closer to like it was within 3.5, we're like at 8.5 million, call it, right?
Mhm.
So
AR, right?
this ARR, right? So this one, what I'm trying to say is that in 2 years, we're going to be at 12 million.
Oh,
If that so December next year, it'll be like about 2 years, right? So
yeah.
I think we'll be at 12 million then. Like,
Did you guys buy key personnel insurance?
what did we buy?
Did you guys have key personnel insurance, key director insurance?
No, we haven't gotten that yet. No, but we will. Don't worry.
Okay, good. Because I can see big potential and very important. Keep everybody healthy.
Yes, yes,
All
yes.
right.
Oh,
So
keep everyone else.
no, seriously, like I'm like, you guys have big plans. Like this is that I really hope this all works out to the numbers you mentioned. Big potential. Then what about exit? What's the timeline? What's the exit options? Multiples. What's your thoughts?
Okay, sorry, I got a message and I got distracted.
Yeah, sure.
What's the what? What's the what?
Exit. What's your thoughts on or plans on exit and timeline options, multiples, things like that?
Like I mean, timeline. I kind of gave you the timeline of revenue.
Yeah.
And the like multiples, like really, like it's hard to tell because it's like you know, in VC multiples could change year by year. You know what I'm
Yeah.
saying?
Yeah.
Like getting a 10, some people give it 10, some people give it 8, some people give it 15, some people give it 20. It just depends on so many factors, right? So it's like that's why like when you look at our business, it's like potentially like even a lot of people would look at it and be like, hey, there are businesses that are like less than half of your
Yeah. Revenue. Yeah.
revenue, and then they're raising at a high valuation. So it's like multiples, I think, is a funny thing until you get to post Series A.
Right.
And but yeah,
but do you like plan to go public? Do you to like what's the exit option? Like for example, if I'm an investor, which I am, like what timeline, what events gonna trigger exits and
so
how much multiple?
so for early investors, the way it works is that typically you have future investors that could come in and like they can buy you out, like that typically starts happening post Series A, where like people are like, okay, well, even the VCs want this, they want to, because they want more of the company, right? So they want to start buying the early investors out, and gives them the opportunity to kind of like have an exit. So we know Matt, right? So Matt, like along his journey, he's done that with people, right? So he's kept some and he's pulled out some, So you have that option as the fundraisers happen. But look, eventually this business has a lot of room to run, right? It's got legs to run, and it can go very, very far. And like it's hard to say what the exit game is. I can tell you our options. I think the options are that very most likely, like a lot of these big PMS systems are going to try to buy us out post Series A and try to like merge us in with them. You're going to have like a lot of acquisition options, and then you're going to have a lot of like opportunity to just like keep growing and go like whether you go IPO, whether you end up becoming an acquisition. It's there's a lot of ways to it, or you kind of like build on just the investors keep valuing it, and it might be like a private huge company. There are companies today that are private that are like Yardi, for example. Like it's a company, a PMS system in our space. Has $1.5 billion of revenue, and it's a private company still. So
how much revenue they have?
$1.5 billion.
1.5 billion. Oh, I know they're big. I didn't know they're that big. Okay.
Yeah. So look, that's what I'm saying. Like, I think the core thing to focus here is like to focus on your customers, focus on your revenue, focus on building an incredible business, and so that you're not relying on so much funding to stay alive. Right. And then that's it.
So I'm the type that if I invest in something, I tend to just pretend I forgot about money. It's like as if the money is going to be there for a long time. I don't care. Don't want to be bad out if I see something potential. So if I do that, and if you guys don't go IPO, does it just mean I'll get the dividends in the future, or like how does?
Well, you have opportunities to like kind of exit at each point of the way. So you come on as a preferred shareholder, which
Mhm.
means that like that's similar to any VC, which means that you're able to like pull your money out. You're the first person who can pull their money out, essentially, right? If anything happens to the company, it gets sold. If it like gets liquidated, anything happens, you're the first person that gets your money back, right? And so, but your exit options really are, most likely that as we get into Series B, Series C, you're gonna be like, oh my God, Reza, compared to our valuation, I've done 30x, and so I want to maybe take half of that out. So you pull half of it out, you leave half of it in, right? So that's the most likely option that most investors do. But some people stick all the way through to like either get the business acquired and then make a big exit then, or to see it go IPO essentially. Yeah.
Now, do you think this one could be a 30x for us?
30x. I mean, we wouldn't be doing this if it wasn't like 30x. Yes. Yeah. Yeah. I mean, look. I think like there's luck involved a little bit here, but like there's a lot of its engine. You can build your luck, right? So, it's like as you scale it, like, and everyone says this is building their idea, but you don't really know until you start building it, right? I think what you just have to focus on is building an incredible business so that, and that's what's right for the founder, but it's also what's right for the investors, right? Because if you do that, you're like, you're de-risking yourself from like losing money. But more importantly, you're on the upside. You know what I'm saying? You're on the upside, and that could be like 30x, could be 100x. You know what I'm saying? It can go very quickly to like, things can get quickly to $1 billion evaluation. Once you get past Series A and you do the right things, you can get there quickly.
Yeah. No, that I agree. Just focus on building it. That I agree. The money will naturally flow, I think.
Yes.